Hi friends, welcome back. Srinivas here. This is the part 3 of the technical analysis video series. So we are looking at Ultratech Cement stock on NSE on a daily time frame, and we would like to discuss about a tool which is known as a Fibonacci Retracement Tool, which will help us get some support and resistance levels automatically. So assume that a stock has been in uptrend for some time, and now it has just started its downtrend, and it's somewhere in the middle. We would like to know what are the various supports and resistances that it might face. Right. For that, what you do, you just take this Fib Retracement Tool. Alt F is the shortcut. Start from the lowest point of interest to the highest, go to the highest point of interest. So single click there, just move the mouse and ensure that you have reached the highest point of interest like this, and then you do another click. Okay, so what this does is this will automatically give you some red, green, dark green. You can see the red band, the light green, darker green, blue band, etc. And you can see this red line, this light green, dark green line, darker green line. So these are all various levels between the high and low points. So if the low point, the stock was at 2,885 and the high point was 8,267, the midpoint is 5,500. Okay, and that's 50%. This is 38.2%. This is 23.6% from the top. This is 61.8%. This is 78% from the top. So on and so forth. So basically, it gives us various levels at which the stock can find some support. So if you look at what has happened, automatically it has shown that this stock took some support on this blue line, did a breakout. There was some support from this 50% line, then a retest twice on 38% line. Then it broke out to the 23.6. Right now it has let me just do Alt V here. So on 9 July, it did a positive breakout from the 23.6% line. And let me do an Alt V again here. On somewhere around 18th Feb, it has done sort of a negative breakout basically. So it has fallen below the 23%. Then it fell. Really, it even broke the 50% here. So you can see that even the 38% was broken. It came to the 50% mark. Then it found a support at 50% mark. Then it sort of did a bounce back here. And again, it has now broken the 50% mark too. And if it continues doing this, you can sort of predict the future of the stock, right? Because see, it has broken level on level, first the 23%, then the 38%, then the 50%. So unless we see it bounce back to these levels, maybe mostly the stock is going to go in the bearish level. That is, it is going to the stock price is going to decrease. That's for Ultratech Cement in the near future. Okay, so in the near future, you can expect a breakdown here, or depending on the candles what appear here, you can either expect a bounce back or a breakdown, and you have to see the candle, see the volumes, and then take a call, basically predict what is going to happen. Okay, so this is the Fib Retracement Tool, and this tool is not only used in the bullish markets, but also you can use it in the bearish market. In the bearish market, you just have to, in the bullish we went from bottom to top. In the bearish, you just go from top to bottom, start at the top, go to bottom, and in the stock will be hanging around somewhere in the middle, and you can predict from that point whether it's going to face get a support or face a resistance, and so on and so forth. Okay, see, so the other tool we wanted to talk about, so let me delete this Fibonacci Retracement Tool. In fact, let me delete all the drawings and the indicators. The other tool we wanted to talk about was the pivot tool. This also gives you, just like Fibonacci retracement gives you automatically some levels where you can where the stock price can find support and resistances. If you just type for pivots and you select this pivot point standard, right? And first you'll get a lot of confusing things. So you just go to settings, inputs, instead of traditional, choose Fibonacci. Okay, in settings, choose Fibonacci under inputs. Say okay, right? So that will give you basically a pivot point, which is known as the P, and 3 resistance levels, R1, R2, R3, and 3 support levels, S1, S2, S3. So in the day time frame, you can see that this stock has done a positive breakout from the pivot point, and I think pivot is going to give it some support here. So if in future days you see that this stock is doing a retest or doing a bounce, and it is going near resistance 1 and breaking that out, and going near resistance 2, you can predict that it is going to be a bullish trend for the stock. If it happens the other way, if it breaks down or breakout is happening in a negative direction, and it goes and hits the support, breaks out from that point, also goes near the support 2 and so on, it will be a bearish trend. Okay, so these are the tools which will help you sort of automatically plot the support and resistance levels. Again, as all formulas in technical analysis, this is approximate, so you have to use this with other indicators and other price actions, candle movements, volumes, and then take a call. Okay, so you can add the volumes also, so you can just search for volume. You can say the average also is shown. So it looks like this candle doesn't have good enough volume to make any prediction. So here we have to wait for some bigger candle with higher volumes to take a trade, basically. Okay, so the other important tool, so let's go back to our presentation. So the other important tools, so we have talked about Fibonacci retrace, we have talked about pivot points, and the other important tool that sorts of gives you some idea of resistance or a support or a breakout in the positive direction or a breakout in the negative direction or a breakdown is known as Bollinger Bands. And this Bollinger Band is useful for mostly useful for places where the trend is flat. Okay, so it's neither a uptrend nor a downtrend. When it is a flat trend, this Bollinger Band will be very useful. Let's try one of the stocks. It's Cosmo Films on a weekly thing, and let's try 23rd November 2020. Okay, 23rd November 2020. Use the go-to tool. So I will just put a Alt V, a vertical mark here. Okay, then I'll go to indicators to use Bollinger Bands. You just type Bollinger here and just select this, just the Bollinger Bands, not the strategy or anything, just Bollinger Bands. And you can see that Bollinger Bands gives you a sort of upper limit. Sort of, you can think of it as a resistance where the price is sort of trying to move away from, and it is getting at the support on the lower blue band, right? You can see the price is sort of taking the support, going up, taking the support and going up. So basically, this orange line is the average line, and the upper blue line and bottom blue line is plus or minus standard deviation from this the mean. Average line, right? So as you can see that on the date, on this date. So if you just use the time travel tool and you go to this 23rd November, right? And if you have the Bollinger Bands, then you would be sort of seeing candle by candle, seeing what is going on here, and you'd be wondering whether you have to take a trade or not. Then you would find a green candle which has just done a breakout of the upper sort of the Bollinger Band. It has broken off that resistance. You will wait for some more candles for confirmation, and so let's keep on going till we get some confirmation, and we can also watch the volumes. So I'll go back to indicators, volumes. Then I will keep on waiting till I get a good. There we go. So you have this green candle with good volumes, and it is good price action also, and the volumes are also good, very good in fact. So this sort of indicates a conversion to a bullish trend now. So it was in a flat trend, now it has become bullish. So you can definitely take a bullish trade here. You can buy at some price here and put your stop loss here. We'll talk what is the stop loss and all that. But you can definitely buy here and see what happens. So let's see what happened if I buy at some price which is Alt H. If I buy at some price here, so it went up, right? And when I see that the price is there is a reversal happening, I can book my profits as soon as possible. Okay, so that's the basic idea here. Okay, so there are other indicators which will tell you when the trend reversal is happening, when the bullish trend is becoming flat and it's going to go into a bearish trend, when the reversal will happen. There are other indicators which will give you that answer, but right now, just as a simple example, Bollinger Band is some kind of a support resistance breakout thing that you can use to predict the movement of the stock price. Okay, especially in the flat trend. And now we come to bullish candle patterns. So till now you have seen what are candles, you have seen what are supports, resistances, you have seen support levels, resistance levels. Now it's really time to talk about the patterns which will predict either a up move or sort of a reversal from a bearish to bullish trend, or the candles which predict the reversal of a bullish to bearish trend. Okay, so bullish candle pattern are the candles which sort of tell you when the trend is going to go bullish, if it is going to go bullish from a flat or a down trend. Okay, so green candles we have already seen before, we have already spoken it in detail. So there is another sort of arrangement of two candle patterns. This is a pattern of two candles basically. So it is what is known as bullish engulfing. Okay, so bullish engulfing means, see, if you have a red candle and there is a green candle, and this red candle which we are talking about has to be in the downtrend. Yeah, so it should not be a flat trend, or it should not be a bullish trend. Currently there should be a bearish trend, that is there should be a downtrend. In the downtrend there should be a red candle, and next to it there should be a green candle which overpowers the red candle with its body. So if you can see here where I'm moving my mouse, if you can see that this green candle's body truly overpowers this red candle's body. Okay, so this is a kind of indication or a sign that there now could be a reversal to a bearish trend. Okay, so this is called bullish engulfing candle pattern. It is one of the candle patterns which shows that shows that there might be a reversal from a bearish, that is downtrend, to a bullish which is an uptrend. Okay, that's why it's called a bullish candle pattern. So it's called bullish engulfing. So as an example, let's look at Central Depository one-day chart on 27 September 2018. Okay, go to date, and as soon as you go to date, you just 27 September 2018, you mark a vertical line, you take our replay tool and put it there. Okay, so now you're in the day of 27th September 2018, right? So all the information, so when you're doing this, just don't pay attention to, because you're doing a technical analysis, you're studying the past. So when you're doing all these actions, don't worry what is happening, what is the price action which is happening in front. You should be blind to that. You should be only looking at your date tool, and you should be looking at only this tool, so that you can do the predictions accurately, right, without having the information of the future. So we are on 27th September 2018, and let's go day by day. So currently you can see that it is a downtrend, or what is known as a bearish trend. So if I go next candle, okay, so now you can see that the trend is down, there is a red candle, but there comes a green candle whose body, whose open and close price outweighs or engulfs the red candle's body. So it is almost like the bulls are saying we are stronger than the bears. Okay, so the bears had this candle, the red candle, but the bulls have overpowered them, and they have given a green candle body which is engulfing or overpowering the red candle. Okay, so let's see the volumes now. Okay, you can see that even this green candle, okay, the average is close to the volume is close to the average, but let me wait for a little more confirmation here. Okay, Now we get a green candle who has volume above the average. Okay, the volume of this green candle is above the average, as well as I have got a green candle. So I'll just do an Alt V here, so just to show you. So and there is three green candles, so I'm confident that hopefully it's going to go into a sort of a bullish market, so I can buy somewhere here. So I'll just do Alt H, and I at the end of this day I can place an order, and I can buy this stock at the price 240.80, right? So settings, probably I'll buy it at 242, because somebody has to, even if I want to buy, I need to offer a sort of a higher price than the current price to buy, otherwise nobody's going to sell it to me. Maybe 242 or maybe 241.50, somewhere there I'll buy. And now once I have bought it, I'll see what happens. Oh, okay, so it went down, which is okay, right? So I'm not selling still. Okay, so I wait for a good amount of time. Okay, so either here, when I see that the trend is reversing, I can sort of sell and book my profits. Another alt edge, right? So I bought it at 241.50. At 251.50, when I see the reversal happening, I can book my profits and sell it off. Or if I can also wait. Let's see if we have waited, what would have happened. Oh, okay. So if you had waited, if you had not booked your profits, then you should really sort of have exited the market using stop loss. So now you are at, you bought it here, and now the share price is here. So your loss is, let's see how many points. So you can use this point measuring tool here. I will show you. So price range tool, vertical tool. So if you bought it here, right? If you bought it on this day when the volume was good, and if you did sell it off here and you did book your profit, let's see how many rupees profit you made. So you made a profit of 10 rupees, because you bought it at 241.50 and you sold it at 251, right? 251.60. So 10.2 rupees profit you made. If you did sell it, and if you missed this downturn, and your price fell, and you realize that it's falling, and you exited, you sold it, let's say here. So I will do another alt edge here, and let's say you sold it here. Let's see what kind of loss you made. So I go from here to here. Okay, you can see you lost 21 rupees on your single share. Okay, so we always have to pay attention to these price actions, reversal patterns. This is not the end of it. There are a lot of more indicators that will really tell you whether this reversal is happening. We are going to discuss about it, but definitely this bullish engulfing is a pattern which indicates a move from a downtrend to an uptrend. Okay, so having said that, let's move on to the next pattern. So there's a bullish harami pattern also. So harami in Japanese means a pregnant lady and its baby. So basically you can see that in the downtrend, if you see a red candle, and if you see a small green candle which is like a baby to its in the womb of its mother. So if you see my mouse, if you see this small green candle, it is looking like a baby in its mother's womb. This is known as bullish harami. So it has to be a downtrend, and it has to have a red candle, and the next candle it should be a green candle which is like a baby in the mother's womb. This pattern is known as bullish harami, and if you get a bullish harami in a downtrend, there with a good probability, maybe 70% probability, it will turn from a downtrend to an uptrend. Again, this indicator is only one indicator. Only this indicator should not be taken. This indicator should be combined with other indicators that we are going to discuss in future. And once that happens, we have to take the trade. Okay, based on many indicators, not just one indicator, and mainly based on volumes. So if this bullish harami happens with very low volumes, we don't trust it. Okay, so going back to sort of analyze this, we'll go back to HDFC Bank and on 17 December 2021. Come here. Okay, so don't see what's in front of here. If you do see that, then there's no point taking a trade, right? Because then the future information which is unavailable to you will affect you, which should not be the case. Okay, so I'll put a alt V here. So this is the date from which we're going to look at the price action. So of course it's a downtrend. You can see that the stocks are falling down, and here we got a bullish harami because there's a baby who's a green candle in the mother's womb. We'll also look at volumes. I see a green candle, but not enough volume, so I'm not going to buy it here. So okay. So again, this is a good candle. So it has a good price action. There's a good big green body, which means it closed at 1564 and it opened at 1536. So there is about 30 points here, and it's good volumes also. So I'm going to trade here. So I'm going to buy a little higher than the closing price. So closing price was at 1564.85. So I'm trying to buy it at 1565.5 maybe. So I'll just do alt edge settings 1565. 1565.5. So I have to buy a little bit higher than the current price, otherwise nobody is going to sell it to me. So that is one thing. So then let's see what happens. So once I bought it there and I waited for it to move up. So currently I'm in loss because the price never did go up, right? So I'm still waiting. So I have two options now. When it comes here, either I can sell it here and book a loss, or wait for some more time. So in future, we will study the patterns, which will show you the reversal is going to happen and all that. And we'll also show you how to protect yourself by putting some stop losses so that your losses are reduced. Okay. So here you are in a good amount of loss because you bought here and the stock jumped down and it opened here and it took this resistance and it has gone down and down. So just let us see for some more days what happens. Okay, so looks like this stock is not going to go up anytime soon. So, oh, there's a jump here. Okay, so we are saved, right? So we can immediately sell here and book our profits. So Alt H. So I will make it blue. Let's see how much profits we made. Okay, so price range from here to here. So per share we made a profit of 90 rupees. Okay, so this is how you have to use your patterns, chart patterns, and in future you'll be taught a few more indicators. You have to use those indicators, and then you have to use volumes, and you have to use your stop loss, your targets. So all these mathematical instruments put together should help you to take the trade, and you should ensure that out of 100 trades you take, even if only 70% are giving you profits, still on an average you should be profitable. Okay, so let's go to the next pattern. So bearish candles. These are the candles basically which tell that it's going to move into a bearish trend, right? So you have seen the red candle already. Now just like there is bullish engulfing, there is bearish engulfing. So instead of green candle outweighing red, here the red is outweighing the green. Okay, so this must happen in an uptrend or a flat trend. Okay, so it must be an uptrend. You must get a green candle, and then a red candle must come and engulf the effect of the green candle. Then we can say it's a bearish engulfing. Okay, we'll take an example. Dixon Technologies on 13 Jan 22. Here, forget what was happening before. Then let's put a alt V here. Okay, so this is 12th Jan 2022. This is a red candle. Okay, green candle. Okay, so here you see there was a downtrend, and a flat trend. So it went down, it came up. Now it's flat, and after the flat trend, there is a green candle and there is a bearish engulfing. Okay, so let's see what happens. Okay, so I have some candles which are showing that there is a bearish sort of trend is starting. So let's look at the volumes again. Okay, so this is a good candle with good volume, so I can sell here. Okay, so this is a note that this is a shorting trade. Okay, so what I'm saying is I'm going to sell here, and I'm going to buy in future. So if I put an alt H here, and if I try to sell here, let me see how much where it goes and how much profit we make. Okay, reversal is happening. So what I'm going to do, I'm going to sell it off here. Okay, so alt H. So how much profit did we make? So price range, what was the price from here to here? Okay, so we made 111 rupees profit because we sold it first. We sold it at what was this price? 4,624. Then we bought it at 4,500. Okay, so sold at 4,600, bought at 4,500. So 100 plus rupees profit we have earned. This is short selling because we sold first and then bought. Okay, so again this has to happen intraday. We're looking at the day candles. You should have done this in hourly time frame, but you get the point, right? So usually it's during beginning of trading we don't take a short trade. So this was just a theoretical example. Okay, so let's see some other pattern now. Bearish harami, just like there was bullish harami, bearish harami. So what is the idea? Idea is the mother should be green, and in her womb there should be a child which is red, and this should happen during an uptrend. So assume there is uptrend or a flat trend, and then a green candle is there, which is the mother, and in its womb there is a red baby candle. Then there is a very good indication that it's going to go to into a reversal. Okay, so if you look at Jubilant Foodworks on 7th November 2012. So now if we start, bring this line here to 7th November. Okay, so there has been a sort of a flat trend. Okay, so you can see that there's a green candle mother and a red candle baby in her womb. So you can see the bullish harami here. So indication is that it's going to go into downtrend. So I can start selling here if I get a good candle. So I'll put the volume also to ensure that I had good volumes, but this is not yet there. So I'll wait for some. Oh, there is a confirmation. So there's a red candle with good volume. So I'm going to sell here. So alt H, I have to sell a little lower than the current market price. So right, so that somebody might buy my share. So settings 127. Maybe I'll buy it, sell it at 127. Let's see what happens. Okay, goes down, goes up. See, when I'm taking a bearish trade, if the price goes up, then I'm in loss because I have to buy at a higher price, right? So I wait. Okay, this is where the stop loss comes in. This is where the stop loss says that there's a reversal happening, so I'm going to sell it here because I don't want it to go up again. Okay, so I'm going to buy it here, right? So I'm going to buy it somewhere here. Okay, so now if we want to measure how much profit we made. Okay, so we made 1 rupee 70 paisa profit. Okay, we bought at 127 and we sold at 127 and we bought at right 125.35. That's 1 rupee 70 paisa. So yeah, so this was about the pattern which is known as bearish harami, and there are other candles. Doji candles. Doji candles are those candles who have a very small body. A very small body means there is a great fight between the bulls and the bears, and neither of them are winning. So if it is a small green candle, if it's a small body green candle, which means the bulls have just won marginally. Okay, they have taken the price a little bit up. The bears have just failed. Okay, similarly, if it is a red candle with a small body, doji red candle, it's called doji candle, right? Doji red candle means the the bears have won from the bulls, but with a very narrow margin. Okay, so that was it means. So these are some of the patterns which can show you trend reversals. The bullish candle patterns will show you trend reversal happening to the bullish trend. Bearish candle patterns will show you trend reversal happening towards the bearish trend. And there are doji candles also where there is no sort of way of telling who is winning, because there is only marginal difference. Okay. So next is bullish chart patterns. Okay, so you have seen candle patterns now. The chart patterns are also like candle patterns only, but here you'll have three candles participating. Okay, 3 to 4 candles participating. So if you have patterns wherein more than two candles are showing the patterns of either trend reversals or trend continuation, then we can call them as chart patterns. So bullish chart patterns are the chart patterns which will show you when the reversal is going to happen, and it will happen to a bullish trend. Okay, to a bullish trend basically. So there is a pattern called morning star. So if you are in a downtrend and if you see a red candle followed by a doji green or red candle, followed by a big green candle, which is as big as the first red candle. So you can see my mouse cursor here. You should be in a downtrend. Then you should get a red candle, which is a good strength in the body. It should be a big green candle. Then you should get a doji red or green candle, followed by another candle which is equal to or greater than which is a body equal to or greater than the body of the red candle, and this will indicate a move towards the uptrend. Okay, so this is what is known as a morning star, and if this green candle has very good volumes, that is a double indication that the trend reversal is going to happen. Okay, and the stock price is going to move up. So for example, let's look at ICICI Bank on 9th March 22. Okay, and let's see what's happening here. So as you know, as you can see, there's a downtrend already, right? So there's a downtrend already, and let's see what's happening here. So there is a downtrend, and there's a red candle followed by a doji green candle followed by a green candle whose body height is the same as the red candle. So this is definitely a morning star, okay? Because from downtrend it is taking us towards the uptrend, which is the bullish trend. And if we confirm it with volumes, so it's a good volume. So I can probably buy here. So somewhere around here, I'll touch. So probably there can be a buy around 696.15. Okay, 697 maybe. Settings 697. Okay, so currently I'm buying very close to the current price, but in future we'll understand what is risk to reward ratios, how to use some tools to decide on your entry price and all that. So let's see what happens in this case. I bought it there. Waiting again. I have not put the stop loss, so that is again something you will learn in the future, how to put your stop loss, so that if things go against you, how to sort of exit the market with minimal losses. So here I'm not putting any stop loss. I'm just waiting. Okay, so looks like there is some trend reversal happening. So here I can decide to sell off, because who knows, it might come down again. If it goes up, it's good, but if it comes down, it's a problem. So what I will do is I will sell at this price. So let me say I sell at 724, right? Because I saw the price action and I saw some reversal happening here. Okay, so if I sell here, so what is the profit we have made? Again, we can use this tool. We bought it at 697, went to 740, 724, right? So 27 rupees profit basically. Okay, so this is how this morning star will help us take a trade. So once morning star happens, we know that the trend is going to go bullish. Then we wait for a good green candle with a good volume, like we did here, and then buy it, and then put our stop losses, put our targets, and hope that we make a profit and sell off at the right time. So that's morning star. So going back to the PPT, there is another pattern which is known as the hammer. So it's called the hammer because if you see this green candle, the wick above this green body is very small, and the wick below the green body is very big. So it is actually looking like a hammer. Okay, so also it has to happen in a downtrend, and this also looks like a bullish harami if you look at it. Okay, but I think difference is for bullish harami, this candle, this green candle must be a doji, but here for hammer, it should be a bigger than a doji candle with a small wick above and a big wick at the bottom. So if you look at India Bulls housing on 22nd September 2020, know what happened in future. Okay, I'll put a Alt V here. So let's have a look at it. So okay, so here we see that the hammer is formed. It's in a downward trend. We have a lot of red candles, and we got a hammer here, a green hammer. So I think the trend is going to reverse. So we'll just put our volumes and wait for a good candle to. This hammer candle did have a good volume, but it's past. So probably we can buy it here itself. So we can buy it at the price of let's say the close price here was 142. Oh, sorry, 145. So we can go for 146. So Alt H, we can buy at 146. Okay, so let's see what happens now. Okay, price is going up. Good. Or some reversal is happening. So now I can decide whether I want to sell off here and make a small profit, or I want to wait. If I had a stop loss somewhere down here, maybe I could have taken the loss and waited. But let's wait and see what happens. Okay. Okay, looks like the price with which I bought it is giving resistance, and looks like now it's going down. So whenever it comes up, I'm going to sell it, because if there is a reversal and again this level gets retested, then I'm in trouble. So what I'll do is I'll sell it off at 157. Okay, so what's the profit we made? We made a profit of 10 rupee 80 paisa, right? Or 11 rupees. So we bought it at 146 and sold it at 157. So that's 11 rupees profit on per share. So again, this was another pattern, the hammer, which happens and gives a reversal. Okay. So similarly, let's look at the next pattern. It's called an inverted hammer. So inverted hammer is where you got a green candle. The bottom wick is a little there or not there at all, and the top wick is a lot. Okay. So if you check out Dollar Industries on 27th September 2021, like we have done so far, you'll see that how the price action moves, and you can do the needful. Another bullish chart pattern which involves a lot of candles is known as what is known as head and shoulders. Okay, assume that you have a downtrend, right? Sorry, this is inverted head and shoulders. Okay, assume you have a downtrend and you see many candles, and you figure out that those candles are arranged in a head and shoulder pattern where this is the left shoulder, this is the head. If you see my mouse, this is the right shoulder, and the candles are there in this pattern. This indicates that there will be a turn towards the bullish trend. Okay, so this is a bullish chart pattern. It's called inverted head and shoulders. Okay, so let's look at RBL Bank on 31st August 2020. Put your blue line there. We don't want to see what is happening in the future. Put an alt V here. Okay, so let's see what's happening here. Okay, so here, if you see the trend, right? If you see the trend either daily or even or the bigger weekly trend, there has been a downtrend, and now it's almost a flat happening here. Okay, so in the weekly, and going back to the daily trend, so it was down and now it's sort of going flat, right? So let's continue. Okay. Okay, so still, there's no good sort of a pattern, or let's look at the volumes. So even though I got some green candles here, their volume are not that strong, right? So there is no trade here yet. So again, keep on going. But when you're watching these charts, you will, and if you study the chart patterns for a long time, you will see that there is a inverted head and shoulder forming here. So let's wait. Okay, so we have a green candle with good volumes here. I'll just put an alt V there. So on 3rd November, I have a good green candle with good volume. So, and I have a supporting chart pattern here which says, so if you go to this button and you can draw a head and shoulder here. So you just pick the head and shoulder, and this is where the left shoulder starts. So I just did a single click there. This is where it ends. Again a click, again a click, again a click. Right. So you can see that the trading view site is helping us to draw our head and shoulder pattern. Okay. So here is our head and shoulder pattern. Okay. So this is our head and shoulder. So if I just draw a trend line Alt T, right? So I'll do Alt T and I'll draw a trend line here. You can see that there is a head and shoulder has been formed, and there is a trend line, and there is a breakout has happened from the trend line, and it's a green candle with good volume. So definitely I can go for a buy here. So I'll just put Alt H here, and it's 184.90. So maybe I'll make it 185. Buy at 185. Buy a little higher because you need others to sell it to you, right? And then let's wait. Again, I've not put my stop loss because we have not discussed about stop loss. Oh, it's going up, and there's a reversal which happened here. I might have sold it here, or this second time reversal is happening. Maybe I'll sell it here. Okay, so again, I'll touch. Maybe I'll sell it at settings style. Maybe make it orange and coordinates. Maybe I'll sell it at 211.5. Okay. Okay, so I sell it here, and just I want to know what if since I sold it, what happened after. Okay, I was unlucky here, so I sold it a little prematurely. Had I waited, I could have sold it much more at a higher level. So this is where trailing stop loss concept comes in. So which we'll study in the future. But this is one of the situations where you could have moved your stop losses up so that you could have waited for better profits to happen. But anyway, that is coming up. We have not discussed about trailing stop loss or stop loss itself. So let's see what's the profit we made on this one. We made a 26.45 rupees. So that's the profit we made. Okay, so that's the inverted head and shoulder pattern. So we go to the next pattern. This is the double bottom. This is similar. Okay, and there is some theory also as to what price you can expect the stock to go. Okay, so it's called the target price. We'll learn about it in future, but just to tell you that basically, if you have this left head and shoulder, left inverted head and shoulder, left shoulder, head and shoulder pattern. Now if you measure what was the distance between your head to the neckline, basically, okay, the theory states that once the head and shoulder gets broken out with good volumes, control drag to duplicate only the level, and since from the breakout, this is the target it will go to, is what is the theory. They say that from analyzing inverted head and shoulder patterns, they have found that if the chart pattern has an inverted head and shoulder and it breaks out, the most probably the level up to it which it will go, or the target price, is the same as this distance. So from head you take it to the neckline, so this is called the neckline here, and from the neckline, the same distance what you measured here, the price will try to go to that level, is what the theory is. Okay, so this is how you will try to gauge where your targets can be. Okay, what is the probable profit you can gain from this trade. Obviously, in this trade, it has gone further up. It has gone more than this distance, but that's the theory basically. So there is another pattern which is like inverted head and shoulder, but maybe you will not get the left shoulder. You will get only the head and either the left or the right, and both the head and the left or the right shoulder will be at the same level. So that gives you a double bottom pattern. Okay, so let's look at Reliance Industries on 5th April 2020 future. Okay, because we want to. So I'll put an alt V here. Okay. So again, if you can see now, this is a flat trend. Okay. So even if you look at the weekly time frame. Okay. So basically, currently we are acting as day traders. That is, we look at the chart once a day, right? And after the market closes, so we are not looking at intraday. So there are some traders who keep sitting in front of the monitor and they make profit in 15 minutes also. So if you look at this, you can get 5 minutes and even 15 minutes. Candles basically. So here what they will do is they'll try to buy here, sell here. So trading in 15 minutes, you have to be concentrated and sitting at the computer doing your trading. And such traders are called intraday traders or scalpers. Okay. So currently we are acting as people who are working on other jobs and they are trading only once a day. Where they're looking at the chart prices at the close of the day and they are taking their trade, and they're a little long-term investors. So they buy daily and they sell it after a few months to make profit, something like that. There are even longer time traders who look at charts only in weekly time frame and monthly time frame. They invest for years together. Okay, so we are day traders where we study charts once a day. Okay, so that's what we are sort of simulating at least. So yeah, so let me go to this tool. Okay, so we are on April 21st. So let's see what happens here. Okay, so just to repeat, it is sort of come to a flat trend now, and even on the weekly chart, if you see, it's flattened out. It's gone up, gone down, but now it's almost flat. Okay, so there's a flat trend happening. Going back to the daily. Okay, let's see what happens. Okay, there's a downtrend. Okay, great. So you can see that a double bottom is getting formed here. Okay, so you can double bottom is of the shape of W. Okay, the letter W. So you can see from here to here to here. So we can quickly draw it. So you can just take the path and path tool and you can start from here, go down here, then go up here, then go down here, and then go up here. Okay, so and then hit escape and settings, make it blue. Okay, so this is the W pattern. So let's see what happens next. Okay, and let's also look at the volumes because we need to take. There are green candles, but not volume is not up to average. So we will wait and see what happens. Oh, there we go. So there's a very good green candle with a very long body as well as a very good volume. So definitely a buy here, right? Because definitely it's going to go up. Okay, so hoping for that. So we're going to buy it. So orange line 2096, 65. Maybe we'll buy it at 2097. Okay. So we have bought it. We have not put our stop loss. We'll discuss about stop loss in future, but let's see what happens. Okay, it's going up, up, up. Okay, there is a reversal. So I have a choice to sell here, or I have a choice to wait. Okay, so let me sell. Let me sell at 2190. Voltage, settings, style. We get maybe purple. Gold leads 2190. Okay, so we bought it at 97 and we sold it at 2190. Okay, because this is 2097, that is 2190. Okay, so 93 rupees profit. So let's see what would have happened if we didn't sell. Okay, so it's coming down, going up. Okay, so again here a trailing stop loss could have helped us achieve higher targets. Okay, so what is trailing the stop loss? We'll understand that in future. But okay, so nobody can predict the future, right? So it's dropped way below the price what we have bought. Okay, so probably it's a good thing that we sold it at. Okay, so anyway, going to the next pattern, cup and handle pattern, similarly to the double bottom, and even there's a theory about this double bottom also, right? So if you consider this as your neckline, right, and this is your price level between the two. And let me do alt H here also. So between these two lines, if this was the sort of the price difference. Okay, so if I just select hover on this, control drag it. So theory says that after the breakout happens, at least it will go to the same distance what it was between the W and the support and the resistance. Okay, so yeah, of course here it has gone much more, but theory says that at least there will be in the uptrend, at least the price will go up by the same distance between the support and the resistance of the W pattern. Okay, so that's the theory. So cup and handle again, we can it's like a W but not really, because the second part of the W is much shorter than the first part. Okay, so we can have a look at this pattern also. It's similarly telling that there will be an uptrend and similar actions need to be taken. When a green candle with good volume comes, you can try buying and then selling and making a profit. Okay, so and there is one more pattern which is called a rounding bottom pattern, but this is happens over a long period of time. Sometimes makes maybe it takes 2 to 3 years for this pattern to come around. So what happens is maybe some company has started, but it needs a lot of gestation time to prove to the market that its product is good, and it doesn't have any proper financial support. And at the end of 2 to 3 years, when its product is good and when it gets the support, the prices just soar, right? Patterns are. Will have a rounding bottom. Okay. For example, Gravita India in a weekly time frame on 20th August 2018. Okay. Premier. Okay. So let's see what has happened with this stock. Okay. So I'll do a white V here. So you know, so basically nobody's in the market is trusting this stock. So it's gone down, 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 and once it's gone down, it's gone to a flat trend, and essentially it has remained flat. And we should be looking at the weekly pattern. So I'm going to go into week, and okay, I'm just going to let it play out, see what has happened. Okay, so this started in 13th of August 2018. So still we're already in 2020, right? Still going. Okay, so you can see now, somebody has realized that this product is really worth buying, and you can draw the arc here, right? So you just start here, you end here, and pull it down here, right? You can see the arc. Okay, and you can see, the theory is that if you take the price level from the bottom of the arc to the top. Okay, so let's say from here to here you're measuring. Okay, so the theory is that it will do many such heights. Okay, so you can just control drag it here. Okay, it will go up till here, and if it goes further up, then it will go up like this, is the prediction. Okay, so let's see what happens. Okay, so I guess it is yeah. Okay, so you can see that it has reached as predicted. Okay, and it has reached taken out this target also. Okay, so this is why it's called the multi-bagger stock, because once people realize there is really worth in this company, it gives you tremendous returns. It has given 7 times the target that or if people bought it here, and its depth is so much, it is given 1 2 3 4 5 6 7 7 times the depth to which it had gone. Okay, so this is how much is this? This is about 42 rupees, and this is 42 into 7. Okay, the PPT. Next will be 3 white soldiers. So if you have 3 green candles next to each other, when you have a downtrend and you see 3 green soldiers, definitely that is that is an indication for a bullish reversal. So it is indicating that a bullish trend has started. Okay, so next will be bearish chart patterns, and we'll discuss that in the next video. Thanks, friends.